Welcome to TNCAP's Market Reflections. We're confident that the recent equity market sell-off is a stumble and that the bull market that began in late 2022 remains intact. While technical factors are playing a role in the sell-off and raising volatility, there has been a clear deterioration in equity market fundamentals, and the damage to equity indices might take some time to repair, even if we are already seeing some positive days emerge. The question for equity investors is whether we are now seeing a sustainable bounce off lows and whether this is a tradable rally. We're doubtful because the drivers for a sustained rally are not yet in place. To be clear, markets can bounce off heavily oversold levels, but we need to see a stabilisation in the macroeconomic outlook and be confident that we have passed peak trade-related uncertainty. While we think US recession fears are overdone, the 2025 baseline has not yet been set, and until it is, or the Fed put becomes more explicit, then markets are likely to range trade. Directionally, Australia has a very high correlation with US equities, as do most markets. Unfortunately, this means that if US markets are weakening due to concerns that can be exported across countries like economic growth, then we doubt Australian equities can decouple. But earnings and valuations and country-specific factors are still important, and we think that the economic cycle is bottoming and set to pick up, that policy rates will continue to decline, and that inflation is yesterday's concern. Against this backdrop, we should see corporate earnings growth begin to rise, and investors should begin to feel more confident about Australia's macroeconomic backdrop. This is an investor-friendly backdrop, and while there are global risks clouding the investment outlook, we are confident that the Australian equity market outlook is solid and that the equity market will rise meaningfully from current levels through year-end. Equity markets are dealing with a lot of uncertainty, and while tactically oversold, you need to see concerns around trade and US economic growth decline or at least stabilise before markets can move sustainably higher. The potential for ongoing macroeconomic disappointment means investors should be prepared for volatility and range-bound markets. This means stock-specific fundamentals are increasingly important. Good value and a strong earnings outlook will be important drivers of returns. We think small and mid-cap stocks will outperform large caps, and value and cyclical stocks will provide the largest upside through year-end, but the path will be bumpy.